Hello everyone, and thanks for joining me. You may be asking yourself, what's an ETF? Firstly, I will give you a definition of what an ETF is, and then I will break it down a bit more. Before I go any further, this information is not financial advice. Please do your own research. If you need financial advice, seek a professional. Exchange-traded funds, or ETFs, are one of the most important and valuable products created for individual investors. ETFs offer many benefits and are an excellent way to achieve investment goals. So let me break it down a bit more. Say you want to buy shares in the stock market but don't know what company stocks to buy. With ETFs, instead of buying one share at a time, you can buy a basket of shares with different companies inside that basket. Let me explain. Perhaps you would love to buy Apple, Amazon, or Microsoft stocks, but don't know which one to choose, and buying a share in all of them is too expensive. That's where ETFs come in. You can buy a basket with a percentage of all those companies. For instance, if you bought the SPY ETF, which tracks the 500 largest companies on the US stock exchange, which is known as the S&P 500, you will get a percentage of all those stocks. So you will get a percentage of Apple, Microsoft, Amazon, Facebook, Tesla, and many more companies within that ETF. You are buying one basket with so many companies within that basket, so the hard work of what shares to buy is taken out. The wonderful part of owning shares is that you can own a part of a business. Yes, you become a business owner. You can use ETFs to gain exposure to a range of different asset classes, including Australian, US, and international shares, commodities, currencies, fixed interest, and cash. If you only want to buy shares in companies that are ethical, there are ETFs for that also. ETFs can be bought and sold the same way you buy normal shares, through a brokerage company. The management fees on ETFs are very low. Look for anything under 0.5%. The SPY ETF is only 0.09%. If you can't find the management fee in the information you have, then Google what the management fee for the ETF you want to buy is. It will come up. Let me list the 5 benefits of buying ETFs. 1. Diversification. They provide you exposure to lots of different assets through just one stock. 2. Accessibility. They allow access to asset classes that are otherwise difficult to reach, such as international shares. 3. Low cost. It gives investors all the balance of a managed fund without all the fees to pay the portfolio manager. We won't get into managed funds in this video, but they are a very expensive alternative. 4. Transparency. They are listed on the stock exchange so you can monitor their value daily, but try to avoid doing that and just leaving them to grow in value over time. 5. Risk. They allow investors to spread risk over a series of investments as opposed to one or two stocks. This can lessen the risk of loss and exposure to nasty swings in the price of any individual stock. Remember that buying stocks and holding them long term, even if share prices go down, is the way to win with shares. When shares go down, that is the time to buy more, not sell. According to historical data, shares always bounce back no matter how low they drop. The people that say they lost money in shares are usually the ones that sold their shares when the market dipped, or they invested in an unknown company that they thought would do well and didn't. I hope this has helped your understanding of ETFs. Please leave a comment and let me know. Thanks for watching, and don't forget to subscribe and like.